Hello everyone, friends. This is Mozart. In general, Bitcoin has dropped to almost $92,000. The low was at futures 92,350. That's it. Overall, everything is going as planned. Well, remember I told you yesterday that it would go either up or down. So it went down. Accordingly, we can mark this as a success. I guessed, so to speak. Anyway, I bought Bitcoin at a limit order of 95,155 with a stop loss at 87,145. And Solana also got bought back at a limit order. It's currently hovering around the entry point. All these signals are available and I provide them in the Telegram channel. And if you want to see more of these signals with entry points, exit points, and many ideas that will go up or down, subscribe to my Telegram channel. The link is in the description below this video. Now let's see if this drop that has already happened is enough, or if there is still room to fall. For this, we should probably look at the daily chart. There's little sense in that. It's better to switch to the 4-hour chart. 4-hour chart, meaning yesterday I mentioned that if we close below this level, we will move to the next level to take liquidity. Here, here, and maybe here. Have closed. Let's go take the nearest liquidity. Removed. Now the question remains about the next one, the two next liquidity blocks. This one at the mark of approximately $91,200. Well, these two blocks are at 89. The probability of closing and removing this liquidity is now higher. This one is lower. They often remove the nearest 2 or 3 bars, that is, 2, 3, during corrections of super trends, and then it reverses. That is, it is reasonable to remove liquidity here at approximately 91,200 and then reverse upwards. Moreover, we have some semblance of convergence on the hourly chart. Well, that is bullish divergence. Call it whatever is more convenient for you. On the 4-hour chart, we broke the 50 moving average, broke the 30, and are heading towards the 100. If we look at a similar situation, for instance, we can see how Bitcoin historically behaved in March after the first pump wave. It was not March, it was still February. This was the first pump wave after a long consolidation. That is, we went up, broke through the 50 moving average, hit the 100, and started to update the highs. During the first pump wave, if we are talking specifically about the news, the first reports about Bitcoin ETF approval were essentially the same. In general, all corrections were limited to testing the 50 or 100 moving averages. I remind you, I am looking at the 4-hour chart, the green moving averages. If we look at it in percent, the corrections were around 7.5%. Here, there was a correction of 10.5%. Here it was 7%. Here it was 5%. 5% sign from floor, 7% sign was 5% sign. Well, that was enough. After the next wave, the corrections were more serious because there was already approval of the actual Bitcoin ETF here, news was sold, but before that, it was also limited to 70% with lower liquidity than now. And then the price was around $45,000. Now it is over $9,000. So, what kind of scenario is it reasonable to expect here? It would be reasonable to expect here. Here is the 100th moving average. At the moment, the correction was 7.6%. Well, 7.7%. Let's round it. Let's say it will be 10. Let's say it will be 10. And this is approximately closer to the mark of $90,000. Well, probably that's how it is. That is, reasonably. That's somewhere, probably this block, approximately this one. This is a good buying point for those who didn't buy limit orders with me right here. And this block is a potential stop for the entire correction, consolidation, reversal there, whatever, adequately. There is an option that we can push the candle down and take this liquidity, but most likely with a very quick return. A very quick return, because in this case, the total correction will already be 13%, which is a lot for the current liquidity, really a lot. Therefore, it is still reasonable to expect these boundaries of $90,000 to $92,500 in. Principal, we have already penetrated here, and plus or minus, a bullish divergence might be drawn on the hourly chart. Altcoins have also gone into correction. Well, there's nothing surprising about that. Given how much they shot up, Total 3 grew significantly, just a little short of $1 trillion in capitalization. Total 3 includes all altcoins without Bitcoin and Ethereum, which is normal. That's how it should be. It would be strange if we went higher without correcting at all. It would be strange. But what is happening now is, in principle, within the bounds of normality. This is regarding the chart. Thus, well, graphically in this block, one can expect in principle its closure. That is possible. It may even spike down somewhere to the levels of 88, 89, but more is unlikely. So, in principle, we might not even close this entire block, but rather move around here between the 100 and the 50 moving averages for some time to consolidate. And that is normal. Even good. If it goes even lower, that would be better. Then the consolidation will be longer, and during this consolidation, altcoins will continue to shoot up. This is what I need right now. And the deeper it goes now, stronger the altcoins will shoot up later, accordingly. That's it. But after this consolidation, it will most likely go higher. That is somewhere over there, to the level I have drawn here, 102,900. Well, and possibly it will still go to 105 to 107, somewhere over there. In December, I don't know. At the end of December, beginning of January, it would need to consolidate, relieve some pressure. They fixed that profit there too strongly, the long-term investors. I will show all of this now. And we move on to the blockchain with some interesting points. I won't dwell on the blockchain for long, I'll just show you the key metrics. So, I will update the number of coins in profit now. And we fought almost. To 100%. And during this correction, it dropped to 94%. Essentially, the minimum target has been met. As a rule, the target is 92-91%. And the maximum target is 87 to 88%. This is roughly the correction in profit reduction. That is, roughly speaking, from 5 to 12%. It is decreasing across the entire system. So, this amount of bitcoins from 5 to 12% across the entire system is turning into a loss. And in regular markets, this is considered a weak to strong correction. The minimum target has been met, a weak correction has occurred. Next, regarding liquidations. So here, yes, now it's larger than yesterday when I recorded the video. $46 million at the moment in net cash over the current day. Multiply by the average leverage in the system, let's say it's the 10th leverage, I won't check, around $500 million. So it's already more, but not critical. So even on November 13th, there was even more. There were more than $500 million in liquidations during some minor correction. For now, yes, some liquidations have occurred, but there aren't too many, and it can't be said that this is the final purge, and there won't be any lower. But something is appearing. Something is appearing. The market is slowly clearing up. Well, probably, in the context since the beginning of October, this is indeed one of the largest liquidations since early October, but not the largest, I repeat. Far from the largest. There have been much larger. And even if we look at March, for example, how we turned around there, the corrections, even without a turnaround, were larger. So here we liquidated at 86, meaning there were nearly $1 billion in net liquidations, and there were $1.5 billion in net liquidations. Once again, $1.5 billion, so there were even more. That's how it is. Moving on. Unrealized profit for long-term holders. I showed it either in the video before last or in the one for that. I'm releasing videos often now, so I don't remember. A situation similar to March. Just slightly touched the point of euphoria. You see the blue graph turned blue, shifted from green to blue, and we are bouncing back. So the blue color here indicates that the point of euphoria is already passing for long-term holders, adjusted for substance. So here we are removing all the diversity of wallets within one so-called organization. We are rewriting all these wallets of this organization, eliminating this error and calculating precisely. Therefore, yes, it is also normal when we bounce off the zone of euphoria after testing it once again. And right now, if we return to this zone of euphoria, if we return to it, then we can soar for a while. Moreover, at that time, both altcoins and everything else will soar. And what we saw with altcoins, and in fact many altcoins have already given returns, was just a warm-up. Returning to the zone of euphoria, we will still see returns from the current levels. Moving on. The chart of long-term holders' expenses, I show it in every video. Well, yes, it makes sense. The selling pressure is high. 407,000 bitcoins were sold in the last month, while 100,000 were bought, which means a fourfold imbalance. Of course, even an ETF would not be able to absorb such a volume of sales, which is why we see a developing correction. The peak of the decline in March, the peak of long-term holders' sales was at 520,000. More than 500,000 bitcoins were sold per month. Currently, it's less than 500,000, 407,000. Although if we look at a bullish scenario, for example in 2021, the figures are much larger. For instance, 1,000,000 bitcoins were sold into the market, and that was just the first stop before the global peak, right here. Yes, there was a correction of about 25%, after which we went on to update the highs. We turned around through divergence. If we are indeed talking about a true bull market, and for now, we are specifically discussing it, then even the current sales value of 400,000 bitcoins is not enough to turn the market into a bear market, or even into such a prolonged consolidation. It occurred from the beginning of March to the end of October. Next, who are the main buyers of fresh rounds now? I also showed a diagram. These are fresh funds. Here we see a chart of realized capitalization, meaning those who are adding them to their balance. And currently, wallets with a lifespan of up to 1 month are strongly predominant. Here, the breakdown is by day, day week, and week month. Their share in the market among all buyers is approximately 20, about 21, 22, and around 26% of their share. It's already quite enough, but this is still not the peak. This is not a peak value, meaning that even in March, it was around 33%, let's say, 32, 33%. And if we look at the bull market of 2021, their share peaked at 48, 33. And if we look at the bull market of 2021, their share peaked. More than half of the activity was attributed to fresh money. And even there, in a manner that was unexpected, we made a complete turnaround through divergence with the price. In 2018, well, at the end of 2017, their share accounted for the short-term holders, very short-term ones, STH plus, as I call them, 57, yes, plus 8, respectively, 65%, meaning a lot, two-thirds. Two-thirds of the entire market volume was attributed to fresh money. Right now, it's still not enough, but it's already a lot. Although this does not smell like a halt to the global trend, we see how much Bitcoin is being withdrawn from exchanges, and the number of Bitcoin withdrawals from exchanges is historically very high. For several days, the equivalent in dollars has been hitting $500 million. And if we look at this chart from January 2021, almost the last 5 years, then such withdrawals, I will just highlight the largest ones that I see here. We can clearly see that they either led to a continuation of growth or to the completion of a correction. For example, here the correction was completed. Here is a global reversal, a change in trend from bearish to bullish. Then here is additional confirmation. Here the correction was completed, turned upward. Here a local correction was completed, turned upward, although not strongly, but it turned. So here, only here did we go down on these withdrawals. I don't remember what happened, but I think in May 2024 something happened after the news about the spot ETF on Ethereum, MTGOX appeared, which started dumping into the market, and therefore these withdrawals did not help. And now, in principle, the situation is very similar. Now, I am also waiting for a continuation of this growth after the correction ends based on these withdrawals. Very significant withdrawals, moreover, historical. Nowhere was the equivalent in dollars broken until the last current week, roughly speaking. It's clear why, because Bitcoin has never been worth thousands of dollars, $90,000. But still, even such results are a good indicator. In summary, at this current moment in time, it appears that the block has the potential to be completely filled, and we have the capability to stop within it if necessary. Furthermore, testing the 100 moving average is likely to be feasible and achievable in the near future. Hitting 89.38 with a spike is also possible, but not very likely. although it is possible. In this zone, I expect a stop now technically, and the lower it goes, the better for altcoins. Then, altcoin consolidation will shoot up, and then Bitcoin will roll in. This setup, I repeat, does not smell like a reversal to a global bear market now, and it doesn't look like it, nor does it resemble such a huge sideways movement as was from early March to the end of October 2024. Thank you all for your attention. This was Mozart, and goodbye everyone.